So the market, after opening with a gain of and with the level close to about 86.43, we've come off a bit. But Mindtree is the stock which is in focus. CNBC TV 18's Purnima Murali caught up with Krishna Kumar Natarajan, the CEO and MD of the company, and began by asking him what is the constant currency margin band that the company would like to maintain.
See, what I've always said is that we look at an opportunity, and if there is an investment required to leverage that opportunity, we would rather take a course of growth over margin. Now, and at this juncture, we believe there's a great opportunity in digital. We have to make investments, and that growth will require us to invest in additional infrastructure like retraining, training of people, which is the reason why we indicated for financial year 16, our margins will be lower than what we delivered in FY15. Now, but if you look at quarter one, I think we did capture a few operational levers, but a 230 basis points impact of Visa was really the only reason why the margins have sort of dropped. So effectively, if the Visa cost was not there, then we would have had a constant margin. Now, looking ahead in quarter two, we will have the headwinds of compensation increase. We will have the headwinds of increasing capacity because we are going to add more people because the demand is going to be strong. In spite of those headwinds, we think the margins will improve in quarter two. So overall, we do believe with the investments also, we would, for the rest of the year, demonstrate that the margins will move up.
Talking about Q2, yesterday in the con call you mentioned that growth in September will be better than growth in June. What's the kind of revenue momentum that you would see?
So if you look at our contract closures, we've closed contracts for 208 million in quarter one, of which 170 million was with the existing customers and 38 million of new customers. With a strong contract closure, if you look at our demand pipeline, our funnel has increased by almost 25% between April and June. So the strong contract closures, we also talked about several multi-million, multi-year deals which we won during quarter one. All of this we think is going to contribute to a strong growth momentum in quarter two. I shared the numbers of 4.8% quarter-on-quarter growth in Q1. At this juncture, what we can say is certainly we believe will be better than that in quarter two.
Talking about the two acquisitions you've made in the first quarter, what's the growth potential with the two acquisitions?
See, like we shared, we believe both these are strategically very important for Mindtree. We've always talked about investing in the digital space, and a lot of our success till now has been in the front end of the digital value chain, which is really the systems of engagement. So the RSI acquisition will help us gain leadership, particularly with CPG customers in the front end of the value chain. Their growth clearly has been 20% plus for the last several years. It is a very IP-led business, so the margin profile is significantly better than Mindtree. So we expect with the Mindtree brand, they'll be able to grow probably even faster than that. The Bluefin acquisition is really going to change the paradigm for us because we do think customers are going to start thinking about how do they digitize the back end of the value chain, which means that enterprises which have invested in SAP as the back end are going to think in terms of saying how are they going to use SAP HANA, and migration services business is, as per SAP estimate, going to be close to 40 billion in the next 2 to 3 years. Getting a world-leading, world-class expertise in that space is really going to put us a step ahead. Bluefin's growth has also been very good over the last several years, 20% plus. So we do anticipate that's going to certainly help us leverage and position us extremely competitively when clients think of really digitizing their entire value chain.
Will you be able to scale up Bluefin Solutions margins to match Mindtree's margins?
See, you have to understand that they are really in the high end of the value chain. It's a very consulting-led, on-site centric business. So the billing rates are higher. Consequently, the costs are also higher. But like James rightly said, with the scale and the opportunity to leverage some parts of the back end of Mindtree, we have already started identifying some of the cost synergies, and clearly those will be opportunities for margin improvement. But clearly the business models are very different. So the margin profile cannot at any point in time match the Mindtree margin profile. But this is a very conscious choice because strategically for the customer, this will deliver substantive value. And whatever are the cost synergies which you can derive out and improve Bluefin's margin, we will put that in place.
You know, Mindtree, digital is the most important space for you. Going forward, do you continue to expect a double-digit growth in the digital space?
See, like I shared earlier, the market demand in the segments in which we are in, I think continues to be very strong. But since it's also pretty much at the early stage where it's very much a project-driven business, it's very difficult to say whether quarter on quarter it will be the same. It could probably be lower in one quarter, but if you look at a little longer time span, year on year, we are very certain that the growth of digital year on year for Mindtree will be far better than the Mindtree company average. Not just for FY16, but maybe for the next 2 to 3 years.
That's the management of Mindtree saying that digital is clearly a focus area and growth